minute charts. And so what should you have on your screen today? You should have hourly charts. You should have 15-minute charts. You should have 5-minute charts. And obviously, you should have daily and weekly charts. So if it's possible for you to have all of those up, the daily and weekly charts will tell you stocks that were stronger prior to the last 3 to 4 days than the hourly 15 and 5-minute charts, or whatever time frames you watch. There are 10, I think a lot of people use, including us. That will tell you when it's okay to time an entry into what you believed was a stronger stock a few days ago. So clearly, TSO and VLO were two of our favorite stocks. They came down with the rest of their market, but now you can see they're also pulled back at or near some support as well. Look, Marion, I think the point is this is a really, really important meeting. But I don't think that we should be saying these are the stocks you should be buying today, or these are. I think that today is a island on itself today, that everybody needs to make a decision if they want to be involved. However, I will go so far as to say the better stocks to be looking to bid or offer today are the ones on the weekly charts, or quite frankly, where the 20 is comfortably above the 50. So those are the ways to filter out. You're either going to be looking at great weekly charts that just happened to sell off last week, or and you know, it's interesting because the 20 and the 50 or any moving average in general could kind of lag. However, today that's not a bad thing, quite honestly. It's actually a good thing because it's filtering out the noise of this. And let me go to the spiders, actually. The moving, actually, that's not a great example of spiders. So, sorry. UA, this is actually a better one. The moving averages are actually filtering out. The whole point of them being averages over time, they filter out the individual noise. So how should you be looking at game plan today? You should be looking for stuff where the 20 is comfortably above the 50. If you can find something that's also above the 20, you are aces to then drop down to the moving averages intraday. Excuse me, not the moving averages, the hourly and the change from the open intraday. So this is kind of a really advanced lesson in short-term trading, but it's an awesome lesson in understanding how to make it and in understanding how to adapt if you plan on taking advantage of today's volatility. But again, I can't stress this enough. You need to write down on a sheet of paper before 9:30 and say, I am absolutely experienced enough to trade this volatility today. If you write that down and then right next to that you write LOL, don't trade. Okay? Don't trade. You are in the game of trading to preserve capital over time, to take advantage of when you have awesome opportunities. And if you personally don't feel like you're ready for that today, there is nothing wrong with that. Okay? But take a lot of notes today. So I guess if we do that from this perspective, Marion, we could cycle through a lot of stocks that we like and just basically say that, the moving averages at this point are telling us we have some good ideas. So obviously we've loved this sector for a while, and NKE, UA, Foot Locker. We've been discussing Toll, Lennar. The smoking stocks actually got hit with the rest of the market as well, but RAI actually looks okay there as well. MO I don't like as much because of the double top up there. See that on the weekly chart?
Right.
I would prefer RAI if I had to choose from the two.
Yeah, I think that's been the strongest in that sector.
Yep. So it's got good room to go to the previous high. It looks like it's going to open up at this breakout level as well here. Right here. That's kind of where it looks like the bid's going to open, so that's not the worst thing in the world there either. So does everybody understand what we're basically saying about the moving averages? Today they're actually helping us because the fact that they're lagging, they're discounting the massive sell-off for the last couple of days. So what else do we have? We have TJ Maxx. We also discussed.
How about some of these utilities? Like you called out that one utility. What was it? The EIX?
Yep.
EIX. Yeah, that's another good utility.
Yep. Moving averages are rising. It has roughly $2 to the next level. Looks like it's opening flat up here as well. Obviously, the Chinese names are still getting hit. Sina, I think, if I'm not mistaken, had closed above the open, which was interesting on Friday. So maybe just finding a little bit of short-term support there. I think that we've outlined a really detailed plan for today. Everybody needs to be honest with where they are and being able to handle the volatility. If you happen to be in a trade coming into today, you really, really need to know what kind of price action you need to see to trade that, to trade out of it accordingly, or to hold it if you are short, or if you're long. Quite honestly, I think if you're short, obviously you're getting a big dish of pancakes this morning. But if you if you're long today, you have to really make some tough decisions on how you want to trade around it today. And Marion, could you expand a little bit on what you meant by margin calls and how that might affect?
Okay, so some people buy stock. They don't just use the money that they have. Like, let's say you have $100,000, but you want to buy stock that's worth more than $100,000. The clearing companies, your whatever trading platform you are, most usually will let you trade above that. But once it gets below a certain threshold, and depending on how much money you have in there and at what level you're at, they'll give you a pass until a certain threshold, and then they will get out of your stock for you because you're losing too much money and you're below a certain level. And it's different, and it's when you signed into your platform, when you signed up, you agreed to that. And you also agreed to us to be in a certain level. So they will just get out of your stock. And now that we've impulsed down so far, and this morning we're opening down further, a lot of those accounts are going to go into margin calls. So they've got to come up with cash some way. The only way they can come up with cash is to get out of their trades, out of their equity trades or their option trade, any of their stock or option trades, any of their trades actually. They'll just sell them all for you.
Yep. So liquidating people who don't have the margin in their account also increases the selling.